Something unusual is happening with SoFi, and investors are starting to take notice. Whether you're a long-term holder, a swing trader, or someone just watching from the sidelines, there's a surge of activity and fresh signals in the market that you need to be aware of. This isn't just about price movement. There's data, institutional moves, and macroeconomic shifts all converging around this stock right now. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's jump straight into the numbers first. SoFi ended the recent trading session with a 2.89% gain, closing at 22.88. During the day, the price ranged from a low of $21.68 to a high of $22.43. One thing that stood out: trading volume. While the total shares traded hit 52.8 million, that's still below the average daily volume of around 79.6 million. But what's interesting is who was trading, not just how much. Unlike the typical algorithmic activity we see driving volume, a lot of the buying this time came from institutional investors, real people and firms making deliberate decisions, not just bots following pre-programmed triggers. While I've talked before about why I prefer institutional moves over algorithmic ones, what matters now is that big players are stepping in, and that alone is worth your attention. Even more compelling, there were large trades executed after hours, trades that don't happen unless there's serious confidence behind them. Orders in the millions: 2.2M, 8.5M, 10.4M, 13.2M, 6.4M, and 2.5M shares. These are massive positions that suggest someone knows or strongly believes that SoFi is headed somewhere significant. If you have any personal thoughts on why this is happening, drop them in the comments. Now zooming out to the macroeconomic backdrop, nothing earth-shattering hit the headlines today, but we did get one important data release. Initial jobless claims came in at 226,000, which is slightly above the forecast of 220,000. That hotter-than-expected number is now fueling even more speculation that the Federal Reserve is preparing for a rate cut at the September 17th meeting. In fact, market watchers are currently pricing in a 92.7% chance of a 25 basis point cut in September. For the following meeting on October 29th, the odds sit at 61.5% for another similar reduction. And while it might be a stretch at this stage, if more hot economic data continues to roll in, we could even see talk of a 50 basis point cut for September gain traction. As for SoFi itself, no official news headlines were released today, but there was an important SEC 10-Q filing dropped after hours. This document is 117 pages long, and while I haven't gone through the whole thing, I did search for one keyword: cryptocurrency. It appears 24 times throughout the report, but frustratingly, no specific launch date is mentioned for any crypto-related product. Reading between the lines, though, it's likely we'll hear something more in Q4. If and when that comes, it could be a big catalyst. Another development worth highlighting is SoFi's website traffic, as reported by Tanner. In July alone, SoFi's platform had 22.4 million visits, marking a record high. Historically, this kind of traffic growth has correlated strongly with an increase in membership signups. Additionally, there was a major loan refinancing update that went live on August 1st, which could be drawing in more users looking for financial flexibility. More traffic means more engagement and ultimately more revenue. Looking at the short interest side of things, there hasn't been much change, though shorts did slightly increase their positions for the first time in almost 2 weeks. We saw a modest bump of 68,000 new shares shorted, bringing total short interest to 10.28% of the float, around 190.73 million shares. Interestingly, some brokers are still offering negative cost-to-borrow rates, essentially paying people to short the stock, which suggests desperation on their end to generate trading volume. Shifting gears to the options market, we saw $26 million in call options traded compared to $6.24 million in puts. While that's a bit below the volumes we've seen in recent sessions, it may just reflect a new normal in the $30–40 million daily range. Importantly, about 46% of today's options trades were bullish, indicating confidence among traders that the stock has more room to rise. Price targets among the bulls are clustered between $22.50 and $23, while bears are betting the price will dip below $21.50. That battle will play out as we head into the next trading day. Open interest is strongest at 22.13K contracts, 22.50 12K, and $23 11K, suggesting these will be key resistance levels. There's even some activity at the $25 mark, 10K contracts, but those bets are more speculative for now. As of now, SoFi is moving within a range defined by a pivot point at 22.26 cents. This level is significant. If SoFi can break and hold above it, there's potential for a run to $24.04, then $25 and possibly $27, which would mark a new 52-week high. It briefly touched above this pivot during the session, but couldn't maintain momentum. Watch closely in the next few days, especially after-hours trading, because testing this level again could set off the next big move. There were also a couple of new analyst ratings published. William Blair issued a buy rating, though they didn't attach a price target. The analyst has a 63% success rate, which is fairly respectable. On the flip side, KBW's Tim, with a 57% success rate, issued a sell rating with a $14 price target. That's a big gap, and again shows the divided sentiment on this stock. From a technical perspective, SoFi has broken above a key moving average, which could signal a trend reversal. The stock had been trading sideways for a while, but this recent push suggests renewed momentum. It's still trading above its key moving averages, and despite the bounce, it's still considered oversold. Any positive catalyst, whether it's earnings, guidance, or macroeconomic news, could lead to more aggressive buying. It's also worth noting that SoFi has held strong above its support zones, particularly around the 47-cent level. This is a critical support, and as long as SoFi stays above this range, the upward trend remains intact. If it were to break below that, we'd likely see a period of consolidation, possibly down to the $18 level. But for now, the bulls seem to be in control. Looking ahead, it's all about momentum, macro tailwinds, and breaking resistance. As we move toward potential rate cuts, investor sentiment is likely to grow more optimistic. With each small rally, we're getting closer to retesting and possibly exceeding previous highs. SoFi continues to be a fascinating stock to watch. Whether it's institutional accumulation, bullish option sentiment, or technical breakouts, all signs suggest something is brewing beneath the surface. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.